Hey guys, it's me from my channel. In this video, we are going to discuss about the different levels of investments. The three levels of investments are stocks, bonds and cash. They all have their own risk level and return levels. If you invest in a stock, then you're taking more risk than if you were to put your money in cash. But you could make more money if the stock that you buy increases in value. So let's talk a little bit more in detail about these three types of investments. Let's start with stocks first. So if you want to learn how to become a millionaire in your eyes, then subscribe right now because that is the goal at our channel. We post weekly videos to help you get there faster. So let's jump into the first type of investment, which is stocks. Stocks are ownership shares in a company. So when you purchase a share of a company, you are literally buying a little piece of that company. When you buy a stock, you own a tiny portion of the company and you also take on some of the risk that the company is facing. For example, if you bought a stock in BlackBerry, then you would be taking on the risk that BlackBerry will continue to stay in business. But if they go out of business, then you'll lose all of your investment. But if you're correct about your thesis that BlackBerry is going to succeed, then you could see massive returns like we have seen with companies such as Apple or Amazon. Now, generally speaking, stocks do carry more risk than other types of investments but also have the potential for higher returns. You can find stocks by looking through the stock market. There are so many options, and if you don't know where to start, then you can simply look at the top companies in the world such as Microsoft, Google, Apple, etc. When you invest in a company, you are trusting that the people who run the company are doing a good job and will continue to make good decisions. It's very important that you understand what you're investing in and what the company does. For example, if I wanted to invest in a coffee company, I would want to know if they sell high-quality coffee, if they have a loyal customer base, and if they have a competitive advantage against other coffee shops like Starbucks. The next level of investment is bonds. Bonds are loans that you make to a company or a government. When you buy a bond, you are lending money to the issuer for a set period of time at a fixed interest rate. So for example, if you were to lend 1,000美元 to the government for 5 years at an interest rate of 5%, then you would receive 100美元 every year for the next 5 years. After the 5 years are up, you get 1,000美元 back. That's the principal. So you would have made 500美元 over the course of those 5 years. So that's 50% return on your investment. Bonds are generally considered to be less risky than stocks because you are lending money to an entity that is supposed to pay you back. However, there is still a risk that the issuer will default on its debt. So that is something to keep in mind. So the main difference between stocks and bonds is that when you buy a stock, you are buying a little piece of the company, and with bonds, you are simply lending money to the company or the government. Now, generally speaking, bonds do not offer the same potential for high returns as stocks do. This is because the interest rate that you earn on a bond is usually much lower than the amount that a company would pay to borrow money. But it is still a great way to diversify your portfolio and to earn a steady stream of income. The last type of investment is cash. Cash is simply money that you have in a bank account or in your wallet. It is not really an investment in the traditional sense because it is not like you are buying a piece of a company or lending money to a company, but it is still a way to store your wealth and to protect yourself against unexpected expenses. For example, if you're saving up for a down payment on a house, then you might want to keep some cash on hand so that if an emergency comes up, you'll be able to pay for it without having to sell your stocks or your bonds. Cash is generally considered to be the safest type of investment because it is very liquid, meaning that you can turn it into cash very quickly without losing any value. However, the downside of cash is that it loses value over time due to inflation. So if you keep 1,000美元 in cash for a year and inflation is 4%, then the purchasing power of your $1,000 will decrease to 970美元. So in other words, you could buy less with that $1,000 than you could before. So this is why it is important to invest your money rather than just keeping it in a bank account. Investing your money allows you to earn a return on your investment, which helps you to keep up with inflation. So the three levels of investments are stocks, bonds and cash. Stocks are the riskiest but have the potential for the highest returns. Bonds are less risky than stocks but also have the potential for lower returns, and cash is the safest but also has the potential for negative returns due to inflation. So it's important to find the right balance between risk and return when building your investment portfolio. Now there are different types of stocks and bonds and each one has its own risk level and return level. For example, there are different types of stocks such as growth stocks, value stocks, large cap stocks and small cap stocks, and each one of these types of stocks has its own risk level and return level. The same thing applies to bonds. There are different types of bonds such as government bonds, corporate bonds and municipal bonds. Each one of these types of bonds has its own risk level and return level. Now I am not going to get too much into the details of the different types of stocks and bonds in this video, but I will be covering these topics in future videos, so stay tuned. It's also important to remember that past performance is not indicative of future results. Just because a stock has gone up in value in the past does not mean that it will continue to go up in value in the future. The same thing applies to bonds. Just because a bond has gone up in value in the past does not mean that it will continue to go up in value in the future. So it is important to do your research and to invest in companies and bonds that you believe in for the long term. Another important thing to remember is that the level of risk that you can tolerate depends on your age, your financial situation and your investment goals. If you are a young investor with a long time horizon until retirement, then you can afford to take on more risk than if you are an older investor who is nearing retirement. If you are financially secure and have a stable income, then you can afford to take on more risk than if you are financially struggling and have an unstable income. And finally, if your investment goals are aggressive, then you can afford to take on more risk than if your investment goals are more conservative. When deciding what level of risk to take on, it's also important to consider diversification. Diversification simply means that you don't put all of your eggs in one basket. If you invest in a variety of different stocks and bonds, then if one investment doesn't do well, it won't have a major impact on your overall portfolio. So for example, if you have 1,000美元 to invest, you could invest 5,000美元 in a high-risk, high-reward stock, 3,000美元 in a medium-risk, medium-reward bond, and 1,000美元 in a low-risk, low-reward savings account. That way, if the high-risk stock doesn't do well, it won't have a major impact on your overall portfolio because you have other investments that are doing well. Now that you have learned the three levels of investments, it's time to decide what level of risk you want to take on. Remember that the higher the potential return, the higher the potential risk. So if you want to invest in stocks, then you need to be prepared to handle the ups and downs of the stock market. If you want to invest in bonds, then you need to be prepared to earn a lower return than you would in stocks. And if you want to invest in cash, then you need to be prepared to deal with the effects of inflation. Thank you guys for watching this video. I hope you enjoyed it and learned something new. If you did, then please hit the like button and subscribe to the channel. If you have any questions, then leave them in the comments below. I'll do my best to answer them, and if you want to learn more about investing, then check out the other videos on the channel.